Inflation is a term we often hear, but what does it really mean? Simply put, inflation is when the prices of goods and services increase over time. This means that the money in your pocket doesn't stretch as far as it used to. Everyday items like groceries, gas, and even rent become more expensive, making it harder to manage your budget. Living through times of high inflation can be challenging, but there are ways to make it easier. This video is here to help you with that. We'll share 5 practical tips to help you survive inflation. These tips will focus on frugal living, building wealth, and saving money. Whether you're a student, a working professional, or a retiree, these strategies can help you keep more money in your wallet. We'll show you how to budget better, shop smarter, cut unnecessary expenses, invest wisely, and build an emergency fund. By following these tips, you can protect yourself from the rising costs and even come out ahead financially. So, let's dive in and start learning how to make the most of your money during these tough times. Understanding inflation. Inflation is when prices for goods and services go up over time. Think of it like this. If a loaf of bread costs $2 today, but next year it costs $2.20, that's inflation. It means your money doesn't buy as much as it used to. This can make it harder to afford everyday things like food, gas, and rent. But why does inflation happen? There are a few reasons. Sometimes, it's because there's more money in the economy, but not enough goods to buy. Other times, it's because the cost to make products has increased, like when oil prices go up, making everything from transportation to manufacturing more expensive. Inflation isn't always bad. A small amount of inflation is normal and can be a sign of a growing economy. However, when inflation gets too high, it can cause problems. People may struggle to afford basic necessities, and their savings lose value. For example, if you saved $100 and the inflation rate is 5%, next year that $100 will only have the buying power of $95. To give you some perspective, let's look at history. In the 1970s, many countries experienced very high inflation rates, sometimes over 10% a year. This period, known as stagflation, was tough because prices went up quickly, but wages didn't keep pace. Understanding inflation helps you prepare for its effects. Knowing why prices rise and how it impacts your finances is the first step in learning how to manage your money better and protect yourself during these times. Tip number 1: budgeting and expense tracking. One of the best ways to survive inflation is by creating and sticking to a budget. A budget is a plan for how you will spend your money each month. It helps you see where your money is going and ensures you have enough for the things you need. To start, write down all your income sources, like your salary or any side jobs. Next, list your monthly expenses. This includes rent, utilities, groceries, transportation, and any other regular bills. Don't forget to include occasional expenses, like gifts or car repairs. Once you have everything listed, compare your income to your expenses. If you are spending more than you earn, look for areas to cut back. Maybe you can eat out less, cancel unused subscriptions, or find cheaper alternatives for some of your regular purchases. Tracking your expenses is also crucial. You can use apps, spreadsheets, or even a simple notebook. Record every dollar you spend to see exactly where your money goes. This can help you identify spending habits and make necessary adjustments. By budgeting and tracking expenses, you can control your finances better, avoid unnecessary debt, and save more money, even when prices are rising. This will give you peace of mind and financial stability during inflationary times. Tip number 2: smart shopping strategies. Smart shopping is key to saving money during inflation. Here are some strategies to help you get the most value for your money. First, always compare prices before you buy. Check different stores and online shops to find the best deals. Use price comparison websites and apps to make this easier. Sometimes, the same product can be much cheaper at another store. Second, buy in bulk when it makes sense. Items like toilet paper, rice, and canned goods usually cost less per unit when bought in larger quantities. Just make sure you have the storage space and that you'll use everything before it expires. Third, take advantage of sales, discounts, and coupons. Many stores have weekly sales on various items. Look through flyers or online ads to see what's on sale. Use coupons to save even more and join store loyalty programs to get rewards and discounts. Cashback apps can also give you money back on purchases. Fourth, plan your meals and make a shopping list before you go to the store. Stick to your list to avoid impulse buys, which can quickly add up. Planning meals also helps you avoid wasting food. Lastly, consider buying generic or store brands instead of name brands. These products are often just as good but cost less. By using these smart shopping strategies, you can reduce your expenses and make your money go further, even when prices are rising. This way, you can save more and keep your budget on track during inflation. Tip number 3, reducing unnecessary expenses. Cutting unnecessary expenses is another effective way to save money during inflation. Start by identifying what you really need and what you can live without. First, look at your subscription services. Do you really need all those streaming services, magazines, or gym memberships? Cancel the ones you use the least. Second, reduce how often you eat out. Cooking at home is usually much cheaper and can be healthier too. Plan your meals and cook in batches to save time and money. Third, limit impulse purchases. Before buying something, ask yourself if you truly need it. Wait a day or two before making the purchase. Often, the urge to buy will pass. Fourth, find cheaper ways to have fun. Instead of going to expensive movies or events, consider free or low-cost activities like hiking, visiting the library, or having a picnic. Finally, review your utility bills. Simple changes like turning off lights when not in use, unplugging devices, and using energy-efficient bulbs can lower your electricity bill. By cutting back on these unnecessary expenses, you can free up more money for important things and savings. This will help you manage your finances better during inflation, keeping you more financially secure. Tip number 4, investing wisely. Investing wisely can help protect your money from losing value during inflation. When prices go up, the money you save today may not buy as much in the future. That's why investing is important. It can help your money grow over time. First, understand the basics of investing. Stocks, bonds, real estate, and commodities are common options. Stocks represent shares in a company and can grow in value. Bonds are loans to companies or governments that pay you interest. Real estate involves buying property, which can increase in value or provide rental income. Commodities include things like gold and oil, which can be a good hedge against inflation. Second, start small if you're new to investing. You don't need a lot of money to begin. There are many apps and online platforms that let you invest with just a few dollars. Look for options with low fees and easy-to-understand terms. Third, diversify your investments. Don't put all your money into one type of investment. Spread it out across different assets to reduce risk. For example, you might put some money in stocks, some in bonds, and some in real estate. Fourth, consider long-term investments. Investments like stocks and real estate tend to grow more over time, even if they have short-term ups and downs. Be patient and avoid making quick decisions based on daily market changes. Finally, seek advice from financial experts. A financial advisor can help you create a personalized investment plan based on your goals and risk tolerance. By investing wisely, you can help your money grow and protect it from the effects of inflation. This will provide you with greater financial security and peace of mind. Tip number 5, building an emergency fund. Having an emergency fund is crucial during times of inflation. An emergency fund is money you set aside for unexpected expenses like medical bills, car repairs, or job loss. This fund gives you financial security and peace of mind. Start by setting a goal for your emergency fund. Most experts recommend saving 3 to 6 months worth of living expenses. This might sound like a lot, but you can build it gradually. First, open a separate savings account just for your emergency fund. This makes it easier to keep track of and less tempting to spend. Next, save a little bit regularly. Even small amounts add up over time. Set up automatic transfers from your checking account to your emergency fund each month. Treat it like any other bill that needs to be paid. Look for ways to boost your savings. You might cut back on non-essential spending and put that money into your emergency fund. If you get a bonus, tax refund, or extra income, add it to your fund. Keep your emergency fund easily accessible, but not too easy to dip into. A high-yield savings account is a good option because it earns interest while keeping your money safe. By building an emergency fund, you create a financial cushion that can help you handle unexpected expenses without going into debt. This is especially important during inflation, when costs can rise unexpectedly. Surviving inflation may seem tough, but with the right strategies, you can manage your finances and even thrive. By following these 5 tips, you can navigate through inflation with confidence. Now, if you want to learn how to achieve financial success, then watch this video next. And if you made it to this point of the video, please like and subscribe to the channel to see more content like this. Thanks for watching, and I'll see you in the next video.